bring it back to clays, brine, hard rock. There's different types of costs to those things. Obviously, brines is traditionally viewed as being quite an inexpensive, low AISC, if you were, to produce. Hard rock is seen as much more expensive, and clays, I guess, it's the great unknown at the moment. If you were looking at these companies, how do you view them in terms of their different cost structures? Again, coming back to this pros and cons component.
Okay, so now I'm going to throw go down another wormhole with you. So there is operating costs, and yes, brines typically are the lowest cost producer for carbonate, and SQM I think is even under $3,000 a ton. But now there's royalties in Chile, as you know. So does one look at the operating costs, or does one look at what the ultimate cost is in order to deliver the final product? Because that's what's going to generate your EBITDA and your earnings. So there's, again, if you ship into China, there are import duties and VAT, and then if you ship out again as a foreign company, there's VAT on top of your product leaving it. So there are cost curves and there are cost curves, and it's another added layer, because if you just look at what operating costs are, and then you look at the financials that are released by companies, you wouldn't think they're the same people, because you're missing out on all of this hidden layer of expenses that happen between operating and sale. So from a pure operating perspective, yes, in theory, brine to carbonate is the lowest cost route, to the point that I think it's probably going to put a lot of the non-integrated producers in China who take independent spodumene and convert that to carbonate, going to put them under pressure. And in theory, a hard rock to hydroxide is the cheapest route. But again, it depends on whether you're integrated or non-integrated, where you source it, and government royalties, taxes, and so on. Because again, Australia has a 5% royalty on spodumene, and you ship it out to China and so on. So we do a lot of work around what is the actual ultimate costs to produce the product, because investors need to know that in order to determine how profitable a company will be, which I'd like to think is what matters.
Okay, so apart from royalties, what are the other components, the other costs that are put onto a company?
So obviously there's shipping, depending on where you're shipping it to, but Argentina has an export tax. Chile has a royalty on Albemarle and on SQM for what they sell it to. As I said, then if you ship it into China, there is import duty and VAT. And if you reprocess it and ship it out, there is another export tax, or VAT, if you will, that when you ship it out. So that's applicable to Livent and to Albemarle. Right.
Okay. So we need to start looking at financial modeling before we actually make some decisions.
Yeah. So it really does. If you want to, again, it depends on where do you do your investing. So if you like to take early exploration plays and run them to feasibility, these things don't matter. If you're actually looking at worrying about operating companies and what the margins are, then these things do matter.